Well, welcome everyone. We're here for the next episode of Stable School. I'm with Sam Broner from a16z. Sam, please take it away. Introduce yourself.
Yeah, sure. So I'm Sam. I'm obviously at a16z. I'm an investor there. Been there about 2 years. I can tell you about myself. I mean, I was a distributed systems engineer for a while, really working in kind of like esoteric consensus algorithms for a minute. I did this big 5-year stint at Microsoft where I wrote CRDTs, and it was great. I went to MIT Sloan after that. And while I was there, I was very curious about getting further into crypto because I had done this consensus algorithm research. But I worked at the Boston Fed doing some stablecoin stuff for them. And that's when I sort of like re-fell in love with crypto. I've been doing it for years on the side, but yeah, stablecoins were actually sort of the first thing I did professionally in crypto. And then 2 years ago, I joined a16z, and it's been a major focus of mine. Stablecoins have been a major focus of mine while I've been there, obviously in addition to infrastructure, some privacy stuff, ZK things. But that's sort of my background. I'm based in New York, and excited to talk to you today.
Yeah. Okay. So that's very interesting. You said stablecoins excite you the most about space.
Okay, yeah. Right. So I mean, look, there's so much exciting here. And I have this funny thing that I like to say to friends. Stablecoins in some ways are actually the dumbest use case of crypto. And let me just sort of explain that a little bit. Yeah. It's a hot take essentially to be on this podcast. But but the idea is like, it's so obvious. It's so blindingly obvious that you'd rather have a atomic, almost instant payment rather than this archaic stuff that we have today. Like you have to understand that stablecoins are a better solution. And we can get into the weeds on why, how it'll happen, and so forth. But it's the dumbest in that it's like everyone can see it. And so I'm so glad that now we have, for instance, 2x the payment volume in stablecoins that Visa did last year. And so, yeah, I guess by dumbest, I mean, it's the first. And it always had to happen first. And I think it's going to be the gateway to a lot of new, interesting, additional things. But first, we have to get a lot of the world onboarded onto stablecoins, using it as their means of payment. So
it's so interesting that you're saying this. I remember, so I have an accounting background.
Yeah, sure.
And actually, as many accounting curriculums, blockchain is part of it.
Yeah.
But you're also taught from day one, this is blockchain, it's useless.
Yeah.
And I remember I saw this Bitcoin documentary. And I was like, this makes sense.
Yeah.
And then I left it. Dumb choice. But so what I love about what you're saying right now, and we'll double click on it, which is like, hot take, might be a dumb use case, but it's so apparent. And I feel like that's such a thing in crypto, which is like, we over-engineer and we go to like a wild direction.
Yeah.
And then here's a use case.
Right.
That's not been adopted by millions and millions of people yet. But we're getting there. But
yeah, I mean, look, so I mean, dumb is meant to be facetious, obviously, but the truth is that crypto has not always been the perfect solution for payments. But I would say 15, 16 months ago, when Base went live and we had KYC'd users on chain able to transact for 1/10 of a cent, or less than that, or around that, I was looking around saying, guys, we have done it now. Like, you can send any amount of money for a fixed cost that's less than a cent. We are ready to go.
Yeah.
It took another year for the bridge acquisition to happen, for some of the markets to wake up. I mean, we've seen a ton of innovation and entrepreneurs in between that time. But there was this like sort of year-long lag where the key constraint, which was the cost of transacting and the speed of transacting on blockchains, was resolved actually in something like August 2023. Solana existed. There was other blockchains, of course, but where it was really available for the masses to onboard happened a year and a half ago. And that's how long it takes to build great product, is that year and a half sort of lead time. And now we're seeing the fruits of that labor, and people are beginning to transact much, much, much more. I
want to double click on that. We see great products because I'm curious what you're seeing that you're excited about. But I just want to tell you another anecdote.
Yeah, please.
I couldn't agree more with you. I was on Twitter and I remember I put this tweet out, and there's some people that came after me, but I was like, the infrastructure is here right now today to onboard. I don't have the exact number, but like the 1 billion or like 800 million people that are like debanked.
Yeah.
I was like, they can access to it. They have access to it today.
Yeah.
They could be banked today.
Yeah.
And they would have access to financial services that they don't have access to, like like today. So it's wild to me that if there's definitely an onboarding user experience issue. There's an educational component to it as well, but I couldn't agree more with you.
Yeah.
It's flabbergasting to me is like, see, oh, it's here today. There's a missing dot. There's a missing connection. It's like, why are the people masses not coming into it?
Yeah, I mean, look, the why aren't the masses coming into it is a fair question. It's a question that I ask myself sometimes as an engineer, but as an investor, I get to see just how hard it is to do go-to-market onboarding and so forth. There's a famous quote, I wish I could attribute this to the right author, but often in fintech, well, let me take a step back. People say that in order for users to adopt a new solution, it needs to be 10x better than the previous solution. That's like a sort of classic startup thing. And then there's a fintech idea, which is that it's really quite hard to make something that's 10x better in fintech. Instead, you have to make a product that's 2x better 5 ways. And I'm not certain that's how stablecoins are going to play out, but that's approximately where we've reached now. To the fact that it's much cheaper to transact, merchants or consumers get 2.5% back versus credit cards. That's 2x, 3x better. The fact that you can hold it without a bank relationship, that's 2x better, and so forth. So there's all these ways in which it's a good bit better, but maybe not 10x better, unless you're currently living in Argentina or Venezuela and you've got hyperinflation, in which case, of course, it's already 10x better. And that's why we're seeing so much adoption in countries like that.
Yeah. I also think it's the access to opportunities that don't exist today for certain regions. What I mean with that is, I grew up in the Netherlands.
Yeah.
Having a trading account, like having access to all these fintech companies or like platforms, very, very easy. I could buy gold on paper, oil on paper, very easy. I was at DEF CON, spoke to a lot of African builders, from African countries. And as I asked them, what are you most excited about? I was like, well, for the first time, what RWA, real world assets, mean to me is that I can get access to US Treasury bills or yields that I do not have access today or at a premium.
Yeah.
And so it's not just the stability of a certain currency. It's also like this whole concept of having yield and where the yield actually comes from. They've been longing for it for the longest time. And it's like, I have access to it now.
Yeah.
And that excites me beyond words.
Yeah, this is an interesting point, and we can linger on it. People want that yield. What I'm worried about is it takes advantage of a regulatory arbitrage that matters so much to the end consumer, but antagonizes some other body. Like, for instance, does Nigeria actually want to have most of their population saving in U.S. treasuries, for instance? And I don't know the answer to that question, and I won't really hypothesize, but we have to find other great ways for people to use stablecoins, where stablecoins are a much better solution than what they have today, in addition to just real-world assets and yield. That matters, but we got to find other things, too, that are going to bring people into stablecoins.
But maybe like where I wanted to segue a minute ago, are you seeing, designs or products out there that would cater for this?
You mean find other use cases that are really meaningful?
Yeah, and also maybe it's sensitive, maybe it's not. It's very interesting because you're triggering me. I can see that.
Yeah.
You're basically giving access to, let's say, a cross-border and different economy, let's say you're in Nigeria and now you have access to, let's say, yields that are coming from, let's say, the States. You're kind of also feeding into that economy, maybe not necessarily building the local economy.
Yeah. Okay, so let's talk about a use case that I think is sort of adjacent to this savings in stablecoins product, which is transacting in stablecoins from one non-US currency country to another. So let's imagine you are a garment manufacturer in Mexico. You have pesos in your bank account and you want to buy raw fabric from a Vietnamese supplier, which is going to transact in baht. How does that transaction actually work today? You have no idea how frustrating that transaction is. You go to your bank, you say, I have pesos, please initiate this transaction. They take your pesos, they bring it to a larger local Mexican bank. That bank attaches to the correspondent banking network through SWIFT, which is like an international, bank thing. They send it to a US bank to US bank, US bank to Vietnamese large bank to local Vietnamese bank. that transaction might take 2 to 7 days. It might cost, somewhere between 2 to 7% of the transaction, or a fixed cost, but you should be thinking, $100 for an $1,000 payment. The worst part, or one of the craziest parts, is that people are reading documents in order to make that transaction happen. It's just an insane experience with structural cost because people are being paid at each of these institutions to do it. You can do it today. Obviously, we know this with stablecoins in 13 seconds for less than 1 cent. Now, there are problems. That's not totally solved yet because you've got to onboard into stablecoins and you've got to off-ramp from stablecoins, but the total cost is still cheaper. And those two things are at the very, on and off-ramping, are at the very beginning of their innovation lifecycle. So they've got a few things going for it. One is a structural cost that's lower. 2 is a actual transaction cost that is lower and dropping quickly. A technical advantage because it's faster, it's programmable, and there aren't people who you would never hire your company in the mix of this transaction. So that's a scenario where it's just so much better and there's no regulatory issue there. And so I'm really excited about that international payment scenario for sure.
I have a question I'm really excited to ask you.
Yeah.
And I think you have a very interesting background. You're an engineer, you're also an investor. So let's imagine, someone comes in and says, I want to build this.
Yeah.
What would the ideal pitch deck look to you? And also, to just give you more context, I agree. So like I said, I have an accounting background.
Yeah.
And I remember doing my MBA and it was kind of blockchain can actually solve for so many reconciliation issues.
Yeah.
That just requires thousands of consultation hours of Big Four.
My favorite fact about this is that people are reading your transactions and approving them. And that is just so crazy. Stripe makes it seem like it's just programmatic. It's not. That's not how it works. Anyway, keep going with your question.
So these use cases are very apparent. They're very apparent use cases. They actually have a business case.
Yeah.
There's a cost benefit analysis to it, where it's positive ROI.
Yes.
What I want to ask you is what does it take to get this off the ground? So when there's a team where you kind of know what you need to do, but which people do you need to be involved? What kind of deals or partnership do you need to have? You're talking about 3, 4, 5 banks. You're talking about, all these settlements that you need to do across networks.
We're cutting all that out. Stablecoins cut that out. That's the benefit of stablecoins is you can on-ramp into USDC, send it over, for instance, Base or Solana or any other L2 or L1, I guess, and have the person off-ramp on the other side. And you cut out 10 actors from the situation. But I think you're asking, someone comes to me and says, I'm building an international payments company. And what do I hope is going to be in that pitch deck? What I hope is in that pitch deck is a really unique go-to-market motion. Usage of crypto fundamentals and incentives in order to onboard the key constituents, and a network effect where the next person, each additional user that joins your product, your network, improves the quality of the product overall. And so that's just a classic network effect. What can be challenging about these cross-border payments businesses is that it's often a pure go-to-market game. Tell people in this jurisdiction and that jurisdiction that they can now transact more readily using stablecoins, and we're going to provide a front end that takes a small fee. This is good, and it's good to have a network of people that are interconnected, but remember, stablecoins are built on permissionless rails. It's pretty easy to exit that application because you could just take your wallet with you and then continue transacting. There's other ways of discovering those users. People are still owning these corridors. I'd call that a corridor. People in one place, people in another place. And we've seen a lot of great businesses. I think last month I saw 15 businesses all growing at 10 to 30% a month doing these kinds of corridor payments. So that's an unbelievable thing I just said. A lot of businesses growing that fast. The adoption is really happening today. But I want to see businesses that understand how to make that defensible, how to make sure that they have network effects, and how to ideally embrace crypto fundamentals.
Yeah. So it feels like also when a project gains traction or a protocol or a company gains traction, they're afraid of the regulatory body coming in or shutting them down. Because maybe a hot take, all these actors that are being cut out, they don't want to be cut out. It's not,
of course,
they're not benefiting from this.
Yeah.
And they're benefiting greatly right now.
Yeah, because they make money on the $100 to send $1,000 from Mexico to Vietnam, for instance.
Correct. And so, one,
This is what you call an extractive network. Like, this is an entrenched network effect, and the people who own that network are taking a cut of it, and the cut is extractive, and people are locked into it because it's too hard to transact other ways. Luckily, that's beginning to break down. We're beginning to see positive network effects grow in stablecoins, and it's going to keep growing. People got to keep their the pedal to the metal, and keep putting the gas on. But it is starting to break down, and these extraction networks don't have as much incentive to innovate. They like taking these profits, so I think we're going to keep seeing growth. It's hard to cut them out, though, for sure.
Yeah, and I just think that they're more well positioned to come in, and then I mean, two of these banks could, like, on both sides of the let's say the border, each side of the border could come in, like, so blockchain,
they can replace. I think you're saying they could replace SWIFT, and the two banks could transact via stablecoins.
Yeah, and I think it happens a lot. Like, I know, not to name bigger names, but I know two very big players. They have actually, like, a private blockchain, and they utilize to settle it. And they do that because the amount of settlement that happens is quite significant, and it's just much faster, et cetera, et cetera. But it's a private blockchains are actually around for a minute now.
Yeah. Okay, so now we're entering philosophical questions on why you might want a permissionless blockchain. First, if a couple of banks were using public blockchains to do settlement, I think that's still a net win. I would rather have people, end users, with private keys on their phone, having that physicality of owning stablecoins on their device. That's my preference. But what we're looking to see is widespread stablecoin adoption on permissionless rails, so that anyone can build their business on chain and have that firm sense that the blockchain's going nowhere. They're not going to get rugged. No one's going to change the monetization such that their business is no longer viable. And so if banks start to work on Ethereum, they're transacting that way. That just creates more liquidity, more incentive for entrepreneurs to build great products on Ethereum, and ultimately is going to bring more people into the market. I'm not going to judge anyone who starts to work on public permissionless blockchains, even if that entity is, a big bank today. That's fine with me.
That makes sense. Switching up a little bit, I think that if you look at the amount of stablecoins that are popping up right now,
sure.
I think
you mean the number of issuers of stablecoins.
Correct. Well, there's also this whole issue of, like, licensed stablecoins, non-licensed stablecoins, there's decentralized stablecoins, etc. But what's your take on what it does for the adoption of stablecoins? That we're seeing so many local stablecoins popping up right now. Is it good? Is it bad?
Yeah. I think it's probably good. I have a lot to say about the market structure of stablecoins, and we can talk about that. So there's a few things going on with local stablecoins. But the big issue really in the heart of the question is, what happens if there's a lot of fragmentation in stablecoin liquidity? Loaded thing to say.
Yeah.
Let's interrogate what that means. Like, right now, if I want to send you $1, that's pretty easy because I can go to an AMM. You can go to an AMM, you can turn it into another stablecoin, you can find someone who will redeem it for $1 fiat, and so forth. You know that the top 3 to 5 stablecoins are very, very fungible to $1, especially if you're only transacting $1. What if you're transacting $1 million or $1 billion? At that point, $1 billion, there's really only a couple of trading pairs that can support that size of a transaction. And that, to me, is troubling. I like seeing experimentation in stablecoins. I wrote an essay, you can find it on a16zcrypto.com, about the different types of stablecoins. There's 3 that we identify. I think this is just sort of how I like to break it up. Fiat reserve stablecoins, so stablecoins that are one-to-one backed by a fiat or fiat equivalent collateral. There's what I call asset-backed stablecoins, but are often called CDPs, is like Maker. And then there's what I call SBSTs, which is strategy-backed dollar tokens. So Athena would be a good example of that. Something that's really a trading strategy, more like a dollar share in a hedge fund. Basically, any type of fiat reserve stablecoin is worth making right now, my hope is to see more businesses that allow the long tail of fiat reserve stablecoins to be integrated seamlessly into user experiences and DeFi. And that's going to require some innovation. It might require a clearinghouse model. It might require just much better orchestrators that deal with the long tail and are incentivized to do that. It might be better on and off ramping, might be better market making, but actually pulling the long tail stablecoins on is a challenge that's not actually 100% solved yet.
Interesting. What are the major obstacles that you see? Like talking about two things. You spoke about there's quite a bit of experimentation going on in the stablecoin space. I agree.
Yeah.
I think that's what drives the number of stablecoins popping up. And then the second thing is like the problems to adoption. Maybe like double clicking on the first. What are like some of the experimentations that you're seeing where you, like for instance, I saw something called flat dollar, which is basically somehow a dollar that is using the Big Mac index.
Yeah.
To somehow like
there's a few of these like inflation resistant stablecoins.
What are some that you say, oh, that looks exciting, not adoption yet, but you see something going on there?
I mean, the one of my major interest is seeing stablecoins be broadly adopted. So I'm most excited when someone comes to me with a product that is using some advantage of stablecoins to bring new people onto stablecoin rails. Often that looks like a yield splitting strategy. I'm not necessarily saying a yield bearing stablecoin. It could be a stablecoin issuer who's willing to incentivize end consumer apps in order to have them operate on stablecoin rails. So let's just like give a small example. Let's say you have your Sam's new stablecoin. We have like a conference app here. We want to have people transacting using stablecoins within that conference app. Well, my stablecoin, my issuer could give the conference a percentage of the yield that I'm earning on the assets under management in order to encourage the conference application to onboard users into stablecoins. That's something I get excited about because we're growing the TAM of stablecoin adoption. That's one idea. The flat tokens are fine, although I think there's some questions about what that does to debt obligations. If you talk to a macroeconomist, it's somewhat useful to have currency slightly devalue over time because it encourages future growth and investing current capital. Okay, maybe we care about that, maybe we don't, maybe we disagree with it, but that's a perspective there. I like seeing new types of CDP stablecoins when they come up, although I'm excited to see that category continue to grow as more very fungible real-world assets come on-chain. So like maybe a CDP backed by on-chain treasuries, for instance. But yeah, those are two areas. I mean, there's a lot of areas that people are experimenting with, but I probably think a little bit more, not just at the issuance level, but what are the enabling technologies? Like, how do we do confidentiality while maintaining compliance? How do we do KYC so that you can interact with regulated entities? How do you actually integrate payments seamlessly into regular consumer apps without having people to worry about their keys, or losing access to the funds over time? So I probably spend a little bit more time at a slightly higher level than just the issuers.
You mentioned regulatory a little bit. How important is regulatory clarity for adoption?
Very important. Yeah. People don't like breaking the law. It's just true. Most people are good people. Most people are operating the economy in a positive some way where they want to do right by regulators. Yeah. They're doing productive things. They're selling coffees in coffee shops. They're selling hats and gloves in a hat and glove store, or they sell software online. Whatever they do, they're trying to do that well, and they'd like to make another 2.5%, but they're not going to risk what is ultimately their business in order to get 2.5% more revenue. It doesn't make any sense. And so we need regulatory clarity, and we also need providers that simplify their onboarding story and help guide them through how to do stablecoin transactions in a compliant way. And so that's why the orchestrators have been a great innovation and have been a accelerant for onboarding people, because they can go to a well-known brand like a Starbucks and say, we'll help you take in stablecoins at the cash register, and we might be able to. I wrote actually an essay about Chipotle. Chipotle potentially gets as much as 12% more profitable, 12% larger if they switched to using stablecoins over Visa. That's unbelievable.
That's unbelievable.
It's an unbelievable metric. Walmart gets like 60% more profitable, and then a grocery store operate on a very thin margin, something like 2%. They might get twice as profitable if they were using stablecoin rails, but they need to be coached through it. This is not their core business. They need to have a payment service provider help them onto stablecoin rails.
I believe, but a lot of what you're saying, and I'm saying I totally agree with it. Infrastructure is here. The solutions are here.
Yeah.
It feels like education is like...
Okay, let's talk about how education happens.
Sure.
Yeah, like what does education mean? Like to me and you, I think it often means like going and telling people on the street like, hey, you can use stablecoins. But how do you actually incentivize people to do industrial scale education of people and really reach out and bring millions of people onto stablecoin rails? Let's talk about the payment service providers. These are boring entities that in crypto we like don't want to talk about. It's just like Stripe. If you check out at a coffee shop, maybe you use Toast or Clover. There's all these solutions. The point of sale thing here, right?
Yeah.
Today they take 15 basis points. They take 0.15% of every transaction. The providers that are switching to stablecoins today, so Stripe allows you to check out using stablecoins. They take 10 times that on every stablecoin transaction. So they get 1.5% instead of 15 basis points. They could not be more fired up about pulling people onto crypto rails because they just expanded their revenue per transaction by 10x. This is a massive enabling force for Stripe and for potentially Adyen and Clover and Square. They should be falling over themselves to enter stablecoins because stablecoins are so much structurally cheaper that they can have a much higher take rate while still having the product be so much cheaper than what credit cards cost today. And so I think that that's going to be, those incentives are going to be how we do the widespread education of the public, because there's a lot of businesses that are incentivized to get people on chain using stables. We can't just go around telling everyone. They're going to hear about it, but we need to have businesses, large scale businesses with distribution that begin to do this, or startups that offer novel products that get people excited. That's not just about cost reduction. We can get into that. That bring people on to stablecoins as well.
Yeah, I think that the nodes are in the industry are very, very interesting. You mentioned like the large scale businesses. Funnily enough, I saw Klarna, which is I think Adyen.
Yeah, they just said Klarna is doing like BNPL stuff, and they just said they're going to start looking into stablecoins.
Yeah, they were the last one to do it, but very interesting. I think the B2B space is interesting. Like, not to name a name, like another big payment provider that I spoke with is like, yeah, this is a game changer for merchants, small, medium enterprises. Like you said, like the margins they operate on is so slim.
Yeah.
And for them being like, hey, we can collect the fees like or swap it for you in stablecoins. They're going out and educating or like offering these services. Educating is maybe not the right word. They're offering services that is just like flipping.
Yeah.
And it's flipping like 9 figures, 8 figures at a time.
Yeah.
And I think definitely that's the play. Or like you said, I'm waiting for. I feel like the apps are out there. I feel like the value propositions are out there. I feel like the communication is an issue. Like there are disruptive apps out there, but when I look at them, it almost feels like you're not communicating well enough, like to the end user, like what the benefit is.
Yeah. So it's an open question. Like I always talk about the 2.5% you pay to Visa, but like, is that actually enough to get you and I to switch? Especially when we might get cash back in our credit card swipes. So you're not even really facing that. You're getting an advantage by using a credit card. Well, Blackbird, for instance, they're doing consumer loyalty at restaurants, but they also integrate a payment solution. And so that can be their margin. And we're seeing more and more projects like that. Agent to agent payments, micro payments are now probably possible with crypto rails. We don't need to talk about just the price improvement or the fact that it's stablecoins. We can talk about totally new use cases that consumers want that'll get them onboarded. I don't love just talking about cost reduction. I want to talk about feature improvement and new and exciting use cases.
Man, I just got the sign that we have 5 minutes left, and
Okay.
I just want to keep talking to you.
Yeah.
Look, you just mentioned something like around AI agents, and I think that agent to agent is so interesting. I saw this video about two AI agents talking to each other, but because they realized that both AI
They
agents
switch to the
Oh
higher
my
fidelity.
God.
It's
Yeah,
crazy, right?
It's crazy. But I also want to give you the floor a little bit by talking about a16z. Like, okay, you're in this space. You write a lot of papers.
Yeah.
You have insights. It's like, how do you like? Where's your focus right now? And how are you utilizing the a16z platform or as your role as an investor to accelerate this adoption towards for stablecoins?
Yeah, well, first of all, I mean, I'm Sam Broner. Hit me up on any platform. I want to talk about your stablecoin ideas because I'm really motivated to, I guess, return money to people's pockets and bring, save them that 2.5% and bring new and exciting use cases that are only enabled by stablecoins. So I want that, and I want you to help me, help us, help everyone do it, and I want to help you build that product. In terms of, and I write a bunch. If you're curious to, follow me or whatever, and we can, you'll see sort of what I'm writing about. What I want to see though is the use cases that do bring that solve one of, let's say, three problems: solving compliance, regulatory, or integrative issues for existing large companies. Compliance, I think people understand. It's KYC, KYB, it's money laundering, things like that. Regulatory is regulatory reporting. Integrative is like, how do you're Coca-Cola, you have all your invoices done through SAP. They're never getting rid of SAP. How do you allow stablecoins to integrate into SAP? There's actually a big business there.
Oh man,
Yeah.
You speaking my language. ERP systems and SAP, like they dominate this. Like again,
we got to integrate there.
You gotta
and there's going to be
integrate.
big businesses to build in that space. Next are things that are a little bit more crypto native. Let's call them go-to-market businesses. These are businesses that bring more people into stablecoins and like actually go out and find those users. They don't just enable them. They go bring them into the fold either through new functionality, much better features, and so forth. That's international payments. It's also things like Loyalty and Blackbird, where you integrate two products and you use the additional margin that you have because you're not taking a credit card fee, and you allow that to be the profitability of the business. So I'd love to see more loyalty solutions, more maybe like collectible solutions, agent-to-agent payments, things like that where you can bring in totally new use cases. And the last, I guess agent-to-agent might fit into this last bucket too, but it's crypto native projects. What does it look like to build a project that takes advantage of the unique capabilities of stablecoins? It's an atomic payment, so payments happen much faster. It's a cheaper payment. There's no fixed cost to a transaction. It costs less than 1 cent. And it's very programmable. I think we're going to see a lot of interesting micropayments solutions. I think we'll see payments integrated into some social, like online social stuff. Zora's sort of playing in this field. I think we'll see smaller incentives. I think we'll see projects that are currently ad supported switch to being paid, but in a micro way that wasn't possible when in order to accept a payment online, you had a fixed fee of 30 cents. So there's going to be all these net new use cases. So unblocking, go-to-market, and net new are the three categories that I'm sort of looking for and would love to talk to anyone who's building in any of those three.
What's your social handle? Do you want to shout it out?
I'm at Sam Broner on every social. So SAMBRONER. And you can also find me on the a16z Andreessen Horowitz website. Talk about stables and honestly, anything else. I do a lot of infrastructure investing, a lot of ZK, privacy, but obviously we're here to talk about stables. So reach out to me about that.
Well, Sam, it was an absolute pleasure. Thank you so much for your insights.
Yeah.
Like I said, I think I could talk to you for like another hour at least. But yeah, thanks so much for your insight and thank you for, joining this podcast.
Of course. Thanks so much, Raza. Appreciate it. It's great.
Awesome.